All right. It's a great day in South Florida. My name is Chris Igoe. Today we're going to get right into it because JPMorgan's Jaime Dimon warns the U.S. is likely to dip into recession in 6 to 9 months. 6 to 9 months? Are you kidding me? We are already in a recession. And the fact that Jaime Dimon doesn't feel it yet tells me everything I need to know about Jaime Dimon. But it also lets me know that Jerome Powell isn't alone in his thoughts that the pain of recession is going to get much worse. But I could also make the argument that Jaime Dimon is now qualified for the Understatement of the Year contest. If you are new to the channel, welcome aboard. And if you are a returning viewer, then you know that I have said since day one that I will be the first to share anything new that happens in my housing market because I'm committed to sharing the truth. Good, bad, up or down, right or wrong, I'm going to share exactly what's happening as a boots on the ground operator of a high performance real estate team. And I'm very intentional to share information that anyone anywhere can benefit from. There are some very hyper local things that must be shared too. And for the first time in a very long time, builders are starting to pivot. As you can see, I got an email from an insider with a local luxury home builder, which gave me some real-time data that I must share. And it definitely shows that buyer demand is changing. Now, I'm not going to go out there and name names, but it will be very obvious if you've been watching for a while. And if it's not obvious and you've got questions, then please reach out to me and I'll bring you up to speed. And now I'm just reading this. Dear Chris Igoe, we will be releasing the next 22 lots in Lotus Palm next Friday, October 14th. And this section is highlighted. We will be releasing 12 new Fiji lots and 10 new Bali lots, including lot 122. Now, full disclosure, lot 122 is ultra premium, sick views. But this is not meant to be a Lotus Palm commercial, but more of an expose as to what's happening behind the scenes. And what you can see here in red, there will not be a price increase. And it goes on to say, if you have buyers interested, please have them complete the reservation document and how and when to make your deposit, which, full disclosure, is this coming Wednesday. So if you are interested in registering for the lottery, then please reach out and I'll get you set up right away. But again, that's not the intent of this video. The intent of me reading this email is to share for the first time in a long time, there is no price increase on the additional lot release. Because during the rollout of the lottery of Boca Bridges and Lotus, there were price increases on every additional lot release. Now, I suspect this will sell out fast, and I suspect there's a tremendous amount of demand for Lotus Palm, but I also know that if GL could increase prices, they would. So while I suspect demand is good, it's not the same as it once was in Lotus or Boca Bridges. And so while they're not offering any crazy incentives to buy in Lotus Palm, they're just not raising prices. Lotus Palm is in Boca Raton, and in Boca Raton, there is no more land to build. In other markets, they are rolling out incentives that are far more aggressive and far more accommodating. In Loxahatchee and the development of Arden, which is a phenomenal place to live, they're offering much better incentives for buyers who are willing to buy homes right now. But I've heard of some insane incentives that are far more aggressive in other states. In other markets, I haven't really seen anything that's that unusual yet. But that's not to say it won't happen, it just hasn't happened yet. And the incentives that I've seen thus far are similar to the incentives that I saw back in 2019 when there was a lot more inventory and a lot less demand, and buyers were willing to negotiate in order to get their inventory off their balance sheet. And so we're starting to see that again, which is great if you're looking to buy a new home in this market right now. But also bear in mind, as things change and the recession and economy get worse, these builders who were not willing to negotiate in the past, just like any home seller, will be willing to negotiate in the future. Which is why it's critical that you never use the builder when purchasing a home, because they will never negotiate against themselves. Let's bring it back to JPMorgan Chase's CEO, Jaime Dimon, who warned today that a very, very serious mix of headwinds is likely to tip both the US and global economy into recession by the middle of next year. Now, full disclosure, it's still hard for me to digest the fact that he isn't aware that we're in a recession right now, but it's even harder for me to digest the fact that he thinks the US economy, and I quote, is actually still doing well at the present time, and that consumers are likely to be in better shape now compared to the 2008 global financial crisis. Now, if you believe that, I've got a bridge in Margate I'd like to sell you. Because the consumer is not in better shape right now than they were back then. But for the benefit of the brevity of this video, I'm gonna leave that alone for now and just get back to Jamie Dimon's quote, which is that you can't talk about the economy without talking about the stuff in the future. And it's serious, serious stuff. Among the indicators ringing alarm bells, Dimon cited the impact of runaway inflation, interest rates going up way more than expected, the unknown effects of quantitative easing, and Russia's war in Ukraine. Now, these are very, very serious things, and I agree with them there. But what I disagree with is that it's likely to push the US and the world into recession, because we're already in a recession. But Dimon seems to think that the US could be in recession 6 to 9 months from now. But these comments come at a time of growing concern about the prospect of what an economic recession looks like, as the Federal Reserve and other major central banks raise interest rates to combat soaring inflation. But please understand, not everybody at the Fed thinks this is a great move. And Chicago Fed President Charles Evans said that he's feeling apprehensive about the US central bank going too far, too fast in its bid to tackle high inflation rates. And I suspect that's because he is a student of history and recognizes the last time the Fed acted this quickly and didn't account for the impact that would have on employment, it triggered the Great Depression. But the Fed has raised benchmark interest rates by 3/4 of a point last month, which is the third consecutive increase of that size. And Fed officials have indicated they would continue hiking rates, well above the current range of 3% to 3.25%, as inflation has jumped to 4-decade highs. Now, Dimon went out there and said he could not be sure how long a recession in the US might last, adding that market participants should assess a range of outcomes instead. And this is where it just sounds to me like he's talking out both sides of his mouth. Goes on to say that it can go from very mild to quite hard. Well, way to cover all your bases. But he goes on to say a lot will be reliant on what happens with this war. Now, I think I started this video by saying I wanted to register him for Understatement of the Year. But if it's possible, I'd like to withdraw my previous entry and submit this one. Because yes, if Russia uses a nuclear weapon in this war, then I think interest rate volatility and recession are probably the least of our worries. But he goes on to say, I think to guess is hard, but be prepared. And the one thing he could guarantee was volatility in the markets. And he also warned that this could coincide with disorderly financial conditions. And when asked about his outlook for the S&P 500, he went on to say that the benchmark could easily fall another 20% from current levels, but that the next 20% would be far more painful than the first. The more Dimon talks, the more entries I have, because the second 20% on top of the last 20%, so quick math here, 40%, yeah, that's gonna be pretty painful. Way more painful than the first 20%. And I'm no analyst, but know it's gonna hurt even worse than that. The next 20% after the next 20% after the next 20%. Or said differently, 60%. 60% haircuts don't feel good. But rather than get caught up in what he says, let's pay attention to what he does. And what he's done is prepare the bank financially for an economic hurricane caused by the Federal Reserve and Russia's war in Ukraine. According to Dimon, JPMorgan is bracing themselves, and they're going to be very conservative with their balance sheet. And he advised investors to do the same. And so should everybody else. So as I'm making this video, it is Monday afternoon, and I'm committed to getting this video out tonight, which means it will definitely be published by Thursday. And on Thursday, you can bet your sweet bippy that there's going to be a ton of volatility in the bond market, because inflation numbers are coming out. And last week we learned that the unemployment numbers were not what the Fed wanted them to be. And so a 75 basis point rate hike is expected. If those numbers come in hot, or hotter than anticipated, a 7% mortgage interest rate may look cheap, but yet to be determined, and keep your eyes peeled for Thursday. And additionally, keep your eyes peeled for a slew of corporate earnings, because corporate earnings are going to tell you a lot about what these major corporations see happening in the future. And while I'm not necessarily interested in what the stock prices do, although I'm not interested, I'm far more interested about learning what they see happening in the future and what they estimate, anticipate, or provide guidance for in the future. And I suspect that will tell you a lot about what's going to happen next year and the year after. But brace yourself, because I don't suspect it's going to be pretty. Now, I hope you found this content valuable, and if you did, please give it a thumbs up, subscribe to the channel, share it with a friend, and check out my next video because I suspect you'll love it a lot. And until next time, peace.